What's good, everybody? Welcome back to the B23 Financial Academy. We hope all of our videos have found you well thus far and that you've gained some level of value for everything we've provided up to this moment. So in this video, we will cover what is arguably the most important aspect or factor in Forex trading, which is trading psychology. Previously, we went through what risk management is and how it applies to the Forex markets, what brokers don't want you to know, trading systems, what they are, and what the concept of a signal is. So in this video, we will cover tier one, which is trading psychology, as well as try to blend everything we've learned thus far. So without any further waste of time, let's get started. So what is trading psychology? Trading psychology is basically the mindset that you have when you approach the Forex market. If you've ever been to a casino or ever played a slot machine, whenever you go to a casino or play whichever game is available at the table or in the building, you don't go into it expecting to win every single time. Your mindset before you go into the casino is, I'm just going to play and we'll see what happens. Maybe I'll win, maybe I won't. That's how most people approach casinos, which is how it's supposed to be approached. But then for some odd reason that we don't know, when they approach the Forex markets, they then expect to win every single time. And it's never going to happen. No system is elite to that level. You will have losses. The key is how do you interpret the losses and how good is your risk management? I'll give you an example. In video 2, we went through different trading styles, I think. No, it was indicators and price action trading. So I'm just going to get those indicators back in. Just want to prove a quick point and then we'll continue. If I'm not mistaken, in video 2, we had this trading system as well as support and resistance. And then we kind of detailed how you would use risk management in both aspects. So when I use the same example again, we're just going to apply trading psychology into it. Okay, I don't think this is that visible, so let me just change it to yellow. Okay, right. Excuse me. So in video 2, we did explain that whenever the moving averages of 10 and 15 cross the moving average of 36, like this will be classified as a sell signal. This is where video 2 comes in. This would be classified as a sell signal. If you're new, go back to video, okay, not video 2, tier 2, to kind of get the gist of where this comes from. This would be classified as a sell signal, and this would be classified as a buy signal. We kind of detailed that already. Okay, we're going to make an example using this trading system only. This is where trading psychology comes in. It's in understanding that using this trading system, it's in understanding that you may have 1, 2, 3. You may have 3 false signals or 3 losing trades, but then have 7 winning trades. Now, just give me a second here. 1, 2, 3, 4, 5, 6, 7. I'm not saying this is the case with this particular system. I'm just giving an example that using this, you may have 3 losing trades or 3 false signals and then 7 winning trades. The key is, or the problem is, we don't know in what order those particular wins or losses will be. We just know for a fact that they will be there. You may have something like this. Your wins and losses will be distributed randomly. There's no way to know whether the next trade will be a winner. Also, please look into the channel of Mr. Mark Douglas. He goes extensively into this. There is a random distribution of wins and losses. Using this system as an example, you may have a win the first time, like here. You may have a win like here. You may have a win somewhere here. You may have a win, win, win. Then your your fourth trade would be a loss. Then the next two would be wins, and the other one would be a loss. The next two would be wins, the other one would be a loss. The key is, let me just type this in. Okay, let me make it 12. Minimize your risk when you've lost, and then maximize your profits when you've won. Excuse me. So back to here, this is a random distribution of wins and losses. It's entirely possible that you may have something like this. I'm just going to switch the order now. We're going to switch the sequence. It's entirely possible that you may have 3 losing trades in a row. It does happen. The key is, will you still be able to execute everything flawlessly, even though you've had 3 losing trades in a row? It's entirely possible that first trade will be a loss, second trade will be a loss, third trade will be a loss. What most people would do is right about here, then they give up. They say Forex is a scam, they stop trading, they give up on trading as a whole, not knowing that the next 7 could be winning trades. And what most people tend to do is they may exercise proper risk management on these 2 trades. On the third one, because they've already lost here because the mindset wasn't proper, then they risk more than they should, and then they blow their accounts, or they just get stopped out, or they lose, and then they just give up, not knowing that the next 7 trades could be wins. It's entirely possible it does happen. Or you can get something like this. Okay, let me just switch the order of this. I'll show you what people also do. I've been guilty of it myself. Oh, and if I did not mention, please look into Mark Douglas. He goes much more in depth into all of this, and he has more experience. I'm just giving you what I know and what I've experienced. Okay. This is another sequence that may happen. It's entirely possible. You may have 7 wins in a row. You may win 1, 2, 3, 4, 5, 6, 7, and then what happens? Right here. You get this, and then you get what's called a God complex. Let me just put this here. And then a God complex develops here because you've won 7 trades in a row. You think you own the market now, and then here on the next 3 trades, you don't use the same risk parameters you had on the first 7. So instead of risking 100 pips like you were risking here, on these trades, you either increase your stop loss Oh, not your stop loss. Okay, yeah, you do increase your stop loss or you increase your lot size. Maybe you are using 0.10 for these 7 trades. And then because your account has grown now, you think you're God, you then use 0.80 on this trade and then you get stopped out. And you're like, okay, it's just a fluke. The next trade, you use 0.80 again. Then you start panicking. And then on the next trade, you risk everything. And then all of your profits that you worked hard for get blown. This happens all the time to new traders, even experienced traders who don't have trading psychology instilled within them. That's the key when it comes to all of this. It's the most important aspect in terms of Forex trading. So I was just using this example we did in tier 2's video. So now, excuse me, let's just do another one from tier 2. Sorry about that. Yeah. Then the other one would be, okay, let me just get a new, okay, sorry about that. My mistake. Just get a new chart. All right. Also from video 2 or tier 2, we want to use the resistance and supports trading system. I'm going to use that. Okay, I think by now, if you've watched the videos, we can all agree that this is resistance. We had touch 1, touch 2, touch 3, touch 4, okay, nearly touch 5. That's fine. So say now you had this, price dropped, and then you see prices approaching the same area again. So in tier 2, we said it's okay to sell here, and then your stop loss would be 100 pips or 200. I think it was 200 pips, if I'm not mistaken. So 0.87181, you add 200, it'll give you, okay, just, I guess I have to do that. 381. Let me just do this. All right. This is what we did in tier 2's video. We said your stop loss would be 200 pips and then take profits about 400. So they clearly went beyond that. It's fine. This would be an example of a winning trade. We kind of outlined that. So now let me show you where things potentially go wrong for people who don't really understand the concepts of trading psychology and understanding that you can lose and you will lose. It's just how you lose that's key. Let's see if we can find a live example. Okay. Right about here. Okay, we can say this is resistance. We have touch here. We have a touch here. Another touch there. Almost touch. So currently price is here, right? We agreed in tier 2's video that once price approaches the same resistance area, we would sell it with a 200 pip stop loss. So current price is 0.86450. If you add 200 to that, it'll give you, okay, 650 is where, about there. Let's change this. Okay. This would be a stop loss. It's 200 pips. Your stop loss is 200 pips. Potential profits, we said, is We said it's 5 in video 2, if I'm not mistaken, around here. Okay, slightly above. All right, right about there. So this is what can also happen if you're using normal support and resistance as your trading system. Let me just type this in. Okay. Price at this moment is around here, right? So we said once price approaches this level and gets here, we would sell. Our stop loss is above here. We don't move it. What some people do is they'd see price here, they'd sell, but then price would shoot up, 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 up. And around here, what they would do is they would panic and then decide to then move the stop loss above. And then what does price do? Price keeps going up. And then they're like, okay, no, I know it's going to go down. So what do? They move the stop loss up. Then price goes up. And then they're like, no, it has to turn at some points. And then they just move the stop loss up and so on and so forth. The more you do this, the more money you lose. So instead of getting stopped out with 650, instead of getting stopped out here and losing $2 or $5 or whatever amount you predetermined, the more you move your stop loss, the more you lose. So you're then breaking your rules of being consistent in thoughts, application, and execution. If on trade 1, your stop loss was 200 pips, your stop loss should be 200 pips on each and every single trade. So that's how support and resistance can also mess with people if you don't understand what trading psychology is. We'll make this example again. And this tends to happen when people have been in multiple winning trades, like at least 5 and above. They then think they know what's going to happen. So then they move their stop loss anticipating or assuming they have an idea of where the market will turn, when that's not the case. No one knows what's going to happen next, but because of a few winning trades, you now think you have control over the markets, and that's not how it works. You don't need to know what's going to happen next in order to make money. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. You don't need to know what's going to happen next in order to make money. You just need to know that your trading system or your signals give you a higher win rate over a series of trades. That's it. If you know that, okay, I have signals or I have a particular robot, if you use that sort of thing, or whatever you use, as long as you know that and you've tested that over 10 trades, my trading system will give me 7 wins or 6 wins and just 4 losses. Either way, it doesn't really matter, because if you apply risk management properly, your losses will be minimized and then your wins will be maximized. So you can still, maximized. So you can still make a lot of money using a system that just gives you 6 wins and 4 losses. It just depends on how you approach it. So this is also entirely possible. You can have, it's also possible that price might just come here and then drop. It's possible price might come here and then drop. That would result in our first winning trade. And then we have another trade to win. Maybe trade 3 is a loss. Trade 4 is a loss. Trade 5 was a loss. This is entirely possible. And then trade 6 was a loss, excuse me. but then the following trades, all of them are wins. It is entirely possible. You just need to have the right mindset when it comes to trading and how to understand all of this. This sequence is entirely possible. This sequence of 4 losing trades in a row, it's more common than you'd think. This is also entirely possible. It just depends on how you approach it, how you interpret the losses. If your risk management is bad, then most probably your account will be blown by the 4th trade, because now your emotions come into play. But if you understand that you do not know what's going to happen next, you trade from a carefree state of mind, as Mark Douglas puts it, then you have nothing to worry about. If your trading system gives you a signal, then just enter, because you don't know what's going to happen next. Let's see. Okay, let me just go back here to give a proper example. All right. As I was saying, if your trading system gives you a signal, like here, if this cross happens, just enter, because you don't know what's going to happen next. Example here, we had a buy signal. If you would have bought, you would have made cash. Here, we had a sell signal. You wouldn't have made your target. It happens. We had a sell signal, buy signal, sell signal, buy signal, sell signal. This happens. Not every system is 100% accurate. All of them have their flaws. Whenever you get a false signal, you just need to make sure your stop loss is good. An example here, you might have got stopped out. Let's see, 1, 2, 3, 4 times, and then on trade 5, which would have made 500. Yes, this is what I was saying back here, that you may have 4 losing trades in a row. You may get 4 false signals in a row, but so the next 5 or the next 10 could easily be winning trades. It just depends on your understanding and how you approach it. Let's just zoom in here. Buy signal somewhere here. Let's see. Okay, profit made successfully. Sell signal here. Nope. Still might have made money, but nope. This would be classified as a losing trade. Losing trade. Super winning trade. Here, losing trade, winning trade. You guys kind of get the idea. You kind of get the concept. Yeah, sorta. Might have got stopped out, but kind of looks like a winning trade. Winning trade. So yeah, that's what I was explaining here. Whatever trading system you use, whatever trading system you choose, you have to test it to see what it gives you over an extended number of trades. Not just 1, not 3, not 5, at least 10, if not 15 or 20. If you know for a fact that your system gives you 6 wins and 4 losses, and if you can minimize the losses here and maximize the profits here, you're sorted. That's basically what trading psychology is. And I know there was not a presentation on it. Thing is, if I did a presentation on trading psychology, the video would be over an hour long. So what I've decided to do is I'll send the trading psychology presentation or PDF on the Telegram group. You can find the Telegram link on our channel. Everything will be provided there. Whatever questions you may have, you may ask on the Telegram channel and we will respond to you promptly. Yeah, let me know if there's something you did not understand or something I may have explained too quickly, and then I'll make a follow-up video on it. Please leave a like on the video, subscribe if you're new. It's been Mr. Billionaire 23 signing out.